Hi guys, welcome back to my channel. It's Emoji Pips again. Today, please, if you haven't subscribed yet to my channel, kindly do that for me. Please kindly do this so that you will receive better content like this. Today, I want to talk about market structure. What is market structure? Market structure is market mechanics, which shows the movement of market. Every game, every business has a signature, and when you get this signature, you'll be successful at it. Market has a language it speaks to us, to which it communicates to us. And if you understand this language, you'll be able to win. And I believe that the only language you have to understand very well so that other things being added, you'll be successful at trading is market structure. That is the very most important thing. Okay. So let me dive into it. Market structure. Let me dive into it. Now, please, we sh- you should know that market moves in three different ways. It's either this way, moving upside, so we say it's an uptrend. It is an uptrend. Market is an uptrend. So we are learning the market structure and we are diving into it. It's an uptrend, or it's like this. It's a downtrend. Okay, it's a downtrend, and sometimes like this consolidation. Okay, this is total consolidation. Okay, so we want to trade in trending. So we want to trade in trending structure. This is a trending structure moving to the upside, so we trade this. And this is a trending structure moving to the downside, so we trade this. This is not a trending structure, so we won't trade this. Very well. Now market move this way or that way, so these are the things we'll be trading. Now you realize that like I said earlier, market move this way or that way. So as you go along, we have one, two, three. These are highs, and down here the blue highlight, we have what lows. But you realize that as you go along, high two is higher than high one, and high three is higher than high two. And here with the blue highlight, the low when you come to the low two, even though they are all lows, low 2 is higher than what? Low 1. And low 3 is higher than low 2. So these are highs, but as you go along, they are increasing. And these are lows, but as you go along, they are what? Increasing. Now, these are also highs. In a downtrend, these are also highs. But you realize that the highs are decreasing. And these are also what? Lows, but you realize that the lows are decreasing. What I mean is that as you go down, this is a downtrend, which means market is moving down. Okay, so if you go down, you realize that two is lower than what? One, and three is also lower than what? Two. And then when you take the low, you realize that two is what? Higher. Two is what? Lower than what? One. And three is also lower than what? Two. So these are, even though they are all lows, they are decreasing lows. Sorry, these are highs. So even though they are all highs, they are decreasing ones. And even though these are all lows, they are what? Decreasing ones. Okay. So how do we modify it so that it will be easier for us to understand it? Now, we realize that as you go along in the high for uptrend markets, the highs are increasing. Okay, so if the highs are increasing, then we modify it. Then we say that the highs are higher ones. Okay, which means that high two is higher than high one, high three is higher than high two, high four is higher than high three. We should see this thing in series for us to actually accept that yes, this is an uptrend. We should see series of higher highs and higher lows. So when you take the low, you realize that even though they are all lows, they are higher ones, they are increasing. So now when you come to the downtrend, we have highs, but we realize that the highs are decreasing ones. So we say they are lower highs, just to modify it. Okay, the highs are lower highs. And then when you take the lower lows, realize that the lows, we realize that the lows are decreasing ones. So we modify it to say that what? They are lower lows. Okay, they are lower lows. Okay. Now, when you have series of higher highs and higher lows, we call it bullish market or bullish structure. Now, when you have series of lower high and lower lows, we say it's a bearish structure. So when the market is downtrend, it means that you are seeing lower lows and lower highs. If you don't see any of this, it means it is not downtrend or it is not bearish structure. So for market to be a bullish structure, we should see series of higher highs and higher lows. For market should be a bearish structure, we should see series of what? Lower lows and lower highs. Now, like I said earlier, high 2 is higher than high 1. High 3 is higher than high 2 in that order. So for this trend to for this structure to continue being bullish, it means the the high, okay, the succeeding high should be higher than the previous high, okay, which means that high 2 should be higher than high 1, high 3 should be higher than high 2, high 4 should be higher than high 3. And then for us to continue the bearish structure, you see, the succeeding high, the succeeding high must be lower than the previous high. So which means that high 2 is lower than high 1, high 3 is lower than high 2, okay? And the lows must be lower ones as well. So for us to continue the structure, it means the previous high must be broken by the succeeding high. Okay, and when this happens, we say it is a pause, which means break of the structure, break of structure. So, like I said earlier, before we say something is bullish, it means a high has been broken and a new high has been created, whereby the new high is what? Higher than what? The previous high. So if it does happen like that, when where a high has been broken and a new high has been formed, we say a break of structure has occurred. The same thing in bearish market. In bearish market, a series of what? Lower highs and lower lows. We say that when the succeeding high is lower than what? The previous high, then we say market is bearish. So for us to continue this bearish trend or this downtrend, it means that the succeeding highs must be lower than what? The previous high. So you realize that if this high took the low of the other high here, and this high also took the low of this high broke the low, and in that order they are lowering, okay? They are all decreasing, okay? So the highs here are decreasing, okay? It means the succeeding high must be lower than the what? Previous high. And the low must also be lower than the previous low. The low must also be lower than the previous low. But here the lows must be higher than the previous. The succeeding low must be what? Higher than the what? The previous low. The succeeding low must be higher than the previous low. So when this happens, we say it is a break of what? Structure. Break of structure. Now, even though it's a break of structure, we don't want to see certain things. For bullish market, we don't want to see the higher low being broken. Okay? And in a bearish market, we don't want to see the lower high being broken. Like I said earlier, for us to continue the trend, the previous high must be broken and the succeeding high must be higher than the previous high in a bullish market. For bearish market, the succeeding high must be lower than the what? Previous high, and the succeeding low must be lower than the previous low. Okay? Now, market should have pulled back, you know, market should have pulled back and then run down. Okay? Market should have also pulled back and run down. This is what I'm talking about. So market should have pulled back and ran down, but not to break the higher low. You realize that these are higher lows, but they are not broken, okay? To keep the market in a trend. Now, you realize that these are higher, the highs, the lower highs. You realize that these are the lower highs. They are not being broken here. This was not broken, this was not broken. So the moment in a bullish market, the moment a higher low is broken, we say it is what? A choke. which is change of character. We believe market is changing its direction from bullish to bearish. Now, in a bearish market, the moment a lower high is broken, we say market is changing its character from being bearish to what? Bullish. So basically, that is all about market structure. Yes, I guess that is all about market structure. I'm going to dive in and look at few examples of them. Okay, so we've learned about higher highs and higher lows, and then lower highs and lower lows, break of structure and change of character. We said when we have series of higher highs and higher lows, we say the market is bullish. And when we have series of lower highs and lower lows, we say the market is bearish. And we say bullish is an uptrend and bearish is what? A downtrend. Now, when in a bullish market, when a higher high is broken, we call it break of structure, just to continue the trend. And then in a bearish market, when a lower low is broken, we say it's what? A break of structure. When a lower low is broken, we say it is a break of structure, just to continue the trend. We also establish that for a bullish market, the higher low must not be broken. Now, we also established that for a bearish market, the lower high must not be broken. And if this happens, we say market that point is what we call chalk and change of character, which means market is changing its character from being bullish to what? Bearish. You understand bullish, bearish. And when we talk about this one, we say that when a lower high is being broken, we say that market is changing its character from being bearish to what? Bullish. So let's look at few examples. So we are going to look at few examples because everything is practical based, okay? If you don't understand the practical, so sorry, I was doing some chart analysis. So let's look at this. Okay. So we have this. We have a high being created here. A high. This a this a lower low rather, and this is a lower high, right? So we have. Why do we say that? Yes. So look at this trend. This was broken. Market came all the way here. Okay. So this high was there, so market broke this. Okay. Lower low. So this is a bearish trend. Okay. So you can see clearly that this market is falling down. Lower low. Okay. And market broke it again. You have lower low again. So you realize that here market is decreasing. There's a lower high at the top. Market broke. Now pulled back, created a high here and broke. Now pulled all the way back, created a high over here and broke it. Pulled all the way back and created a high over here and broke it. So in this trend, you see market is down. See, so here expected market broke through this. Price broke through this. It's a low. It's a lower low. So just in a bullish market. So you see what we learned, the same concept, market is down, Okay, so this is a real life market and market is down. Okay, so let's look at this is for bearish market. So you realize that the lows are being broken. Market pulls back and run down and break the low. Market pulled back and ran down and break the low. Pulled back, ran down and break the low. Pulled back and ran down all the way and break the low again. Pulled back again. So that is what is happening. Okay, that is what is happening. Now let's look at it in a bullish market. Okay, let's look at the picture in a bullish market. This trend is choppy, and that is how you see the market. You see, I don't want to do anything. You know, you go there in the market. You don't really. You have to. It takes time of practice to understand market structure and to draw them very well. You see, these are higher highs. The higher highs must be broken. The higher high market break pulled all the way back. See, it pulled all the way back, and then it broke it again. It pulled all. You see, it broke this, went all the way up, pulled back, and then broke it again. So some of your gurus will teach you these two as well. Okay, and I'm explaining it in market terms. I don't want to use some clear chart for you to understand that, oh, market, forex market, that's how it is. No, please. Market behaves all the time like this. Okay, it takes time to understand the structure because some of the structure are not really relevant. You see, this one is a pullback. Market broke through here and pulled back over here and broke it again. Okay, and then you see, you see, you see what is happening. So market started all the way from here, right? Look at this. This high was broken. So this is a bullish market. This is a higher high. So this is a bullish market. This high was broken. So for us to continue the trend, the high must be broken. Remember, okay. So this is how the market looks like. Very, very, it's not really clear, but you need to understand. Market took the high here, pulled all the way back, and broke it again. Pulled back and broke it again, and pulled back again. And what happened? Broke it again. Now when market is coming, we said that lower low. This low must not be broken. What do you see? The low was broken. And we said that if the low gets broken, what do we call that? We call that chalk. Okay? And that is what? Change of character. It means market is changing its character. And it's true, market changed its character to down. Okay? It was bullish initially. Initially, market was bullish. So I started all the way from here. Market was bullish, break this high, pulled back, break the high again, pulled back, break the high again, pulled back, break the high again. And we said that in a bullish market, the higher low must not be broken. What did market do? Broke it again, and then it has changed direction from bullish trend to what? Bearish trend. So that's what we call this one change of character. So this is how the chart looks like. It's not something very easy. You can spot it. So you have to take time to master break of market structure, and that is very important for you. So you need to take time. You need to invest time into it to actually understand it. I didn't use clear chart for you to know that maybe market. No, this is how market looks like. Kind of really difficult to actually spot trends. Okay, but when you spot it, trust me, you are good to go. And you see here, this high was taken, and market became a chalk. Okay, became a chalk, chalk, chalk. I told you stay to the end of the video. Okay, chalk, chalk, chalk. So that's what's happening. Okay, basically, market move from bullish trend. I'll show you an example. This is how the chart looks like. Very, very, it's not really clear. You need to take time to understand it before you can actually draw them very well. And if you're able to understand this thing, you can make money. You know when trend is changing, and that is it. Trend changed here, and it's a what? It's a buy. All right, guys. Thank you so much for staying to the end of this video. Thank you so much for subscribing. If you have any question, you can drop it on the comment section. Thank you so much for sharing, and thank you so much for the like. Kindly subscribe to my channel for a better content like this. So we are done with market structure, and I'll be dropping a video on things you can add to market structure so that we add confluence to our trades, so that we filter out bad trades. Thank you so much and have a nice day. Bye. It's Muji Pips here. Wow.